Hello everyone, this is Joni, and I'm doing this video to record how to use the RSI2 mean reversion strategy. So, as the name implies, mean reversion means that you are waiting for the market to overextend or at least show some weakness. So, overextension or show some weakness, and then you enter at that weakness and hope that the market continues to trend towards your favorite direction. Okay, so we're going to use this for Germany 40. Note that you can use this also for other assets like Nasdaq or S&P or gold or silver or oil. Um, Very much any market that shows strong tendency to trend. Okay, so let's explain how this is done. But first, let's talk about the indicators that you need. Okay, the first indicator is the 10 EMA. Again, 10 EMA, that's the yellow line and the 200 EMA, which is the blue line. You also need the relative strength index or the RSI, but I changed the period to 2. So the standard or the default for RSI is 14. In this case, you need to change it to 2. Okay. And the levels of concern would be 15. So here the broken white line is 15. Okay. So how does this strategy work? So every time the market shows weakness, it would go below and close below the 10 EMA or the yellow line. So that's when you look for this kind of setup. Once the candle or majority of the candle body closes below the 10 EMA, you want to look down to your RSI period 2, and the line should be below 15. Okay, not 15, below 15. Okay, so when it's below 15, especially in this candle, okay, what you want to do is you wait for the market close 15 minutes before the close, or you can choose to enter at the next market open or the next day. Okay, so in this case, this candle has majority of its body close below the 10 EMA, and RSI2 is now reading below 15. So the next day, we take a long trade, and the stop loss, I want you to give it 5% stop loss from the entry price, okay? 5% stop loss from the entry price. Okay, so now what do we do next? So we want to be prepared when to take profits. So the recent swing high is right here, and this marks when you could start trading profits. Okay, so once this swing high is reached, I'd like you to start trading profits. So in order to do that, I'd like you to do is to move your stop loss to break even. Okay. And once your stop loss is already at break even, let's say it's already right here. Okay. You only exit when price closes back below the 10 EMA. Okay. So as you can see, every day it keeps on going up. So just keep on trailing your profits for every swing. Okay. Especially in this case, there's a swing low, then another swing high, then a swing low, then another swing high. So I want you to keep on trailing until you see a decisive close below the 10 EMA. Okay. So at this point, you'll see that you would have made at least, okay, 10% in that scenario. Okay. Let's take a look at another example right here. So this is when price is below the 10 EMA. Okay. Another entry. And RSI2 is below 15. So enter at the next market open, 5% stop loss. Okay. And then you wait for it to arrive at that previous swing high. And that's when you start trailing your profits. And only exit when you see price closes below the 10 EMA once again. So in this case, it closed below right here, okay, giving you at least 1.45%. Okay, 1.45%. If you're able to close that 15 minutes before that day ends. But if not, then you would have arrived somewhere around here upon open, getting at least 0.98%. Okay, so here's another entry. This one, no, because the body is not yet completely or at least majority below 10 EMA. This is the one. Okay, you enter another long trade at the market open here. Again, 5%. Okay. And only exit when you see a close below the 10 EMA, which is around here. That's giving you about 1.83%. Okay, so this is a really deep retracement or pullback. And as you can see, this is where the RSI is below 15, and this is potentially another entry. Not this one, but this one, another entry right there. Okay, 5%. And as you can see, this would have been stopped out already. Okay, so we have a loss right there. You don't have a 5% loss. This is still equivalent to 1%, but the distance is 5%. Okay, so in order for us to re-enter, we need a close above the 10 EMA and then another close below the 10 EMA. Okay, or we can try this one again. Okay, we're still below the 200 EMA, so we cannot take a long here. So wait for another opportunity. Okay, so we got a close here, but not majority of the body is below 10 EMA. So let's take a look at this one. Here, majority of the candle is already below the 10 EMA, and we are RSI2 below 15. We take a trade at the next candle right here. Take 5% stop loss. Okay. Okay, and then we wait for price to get back to this previous swing high. Okay, and that's when we start trailing our profits. Okay. Say we start trailing our profits once we get there. And then we wait for price to go below the 10 EMA for an exit. Okay, so that would have given us 0.90%. Okay, let's see if we can have another opportunity. Here's another opportunity here. RSI2 below 15, body completely below the 10 EMA. We enter right there, give ourselves 5%. Okay, and then wait for price to get above this. If not, and we see a close below the 10 EMA like this one, then we exit right here, thus giving us 3.15%. Okay, so I hope you get the gist, okay? So there are really good trades here, especially that Germany 40 is a trending market. So you could just imagine every time the price goes below 10 EMA and below RSI2 below 15 and price starts to trend, then you're looking at really good returns, okay? So I hope this is easily understood, and I hope this helps you out and turn this into an additional strategy for you, or it could be your main strategy. Okay, this is a trend follow strategy, only traded in the daily time frame. Okay, so I hope this helps. Thank you.